Okay. So what I was saying was, because debenture interest is tax deductible, it is getting deducted before calculating tax. Now, if because preference dividend is not tax deductible, so it is deducted after calculating tax. Now, you definitely agree with me. If the preference dividend is deducted before tax, if the preference dividend is deducted before tax, that would actually change our answer. Do you agree?
Correct. Yeah.
Yeah, because our tax amount will
Yes.
change, isn't it? Because our tax amount will change.
Right.
Yeah. Any doubts, guys? Anything that you want to address, or any other additional detail is also fine. Otherwise, I'll move to the fourth one before moving to the question. Okay, I'll take that as no. Now, this one is a very simple one. This is where I want you to think about the decision making process. Now, suppose you are there in front of Shark Tank people. They have given you these four different or five different or 10 different options, saying that, one person is saying that I'll invest fully in equity, one person is saying I'll invest fully half in equity, half in debt, some person is saying no, I'll go for only debt, some person is saying no, I won't invest at all, but I can advise you as a kind of royalty you can pay, and on that basis I'll give you my service, kind of thing, or any other kind of arrangement. How do you take a call as an owner of the company? How do you decide from the financial perspective? Okay, having everything else put on another box, only thinking from the financial perspective, how do you take a call? Which option should you select?
Is it like suggestion to the investor? Company is going to give based on the decision or the
Can
option
you
they are going to
please
select?
elaborate? What do you mean? I did not get
Okay.
it.
So,
Mhm.
so you mentioned like how the company is going to make a decision, like which option has to be like selected.
Yeah.
So this option, whatever a company is going to select, either it is a suggestion given to investor, this is the best option so that you can make a good profit, and also companies definitely are
No,
making some.
no, no, not a suggestion. I'm saying you have gone to five, six people. Okay,
Mhm,
you asked
mhm,
them for investment. They have given
mhm,
their opinion that I'm going to
mhm,
invest in full equity. I'm going to, somebody else said I'm going to invest in half equity and half debt. Somebody else said, no, I'll go for full debt. Somebody else said, no, I won't invest anything in equity or debt. I'll rather give you, I won't give any money. I would just give you my service as a kind of, I'll help you out in the industry, like that. You can pay me royalty or some amount. So among all those options, how do you determine which one is the best for you?
uh, like it depends on the company, like whether they are like mainly looking for the long term relationship with the investors or
No, forget
profit,
about
like
those.
pure
That's why I was saying, the relationship, what are their strengths, those person's strengths. Somebody is better in marketing, somebody is better in some particular industry. Forget about all of that. Let's think about only financial perspective. Okay, from profit
profit.
perspective, or from financial perspective, or from valuation perspective, which option should you choose?
Whichever is generating more profit to the organization.
Okay. Anybody else with any different answer?
So as an investor, I would like to go where I get the maximum return, right?
Perfect. Yeah, 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 absolutely right. And we
And
have already discussed
that
what is that return called. Can you name it?
Dividend.
No, no.
not necessarily
Dividend.
dividend.
Yeah, please.
No, no. That's a return on investment for us.
That is what is called earning
E-
per share.
Earning per share. Earning per share.
So what happens is dividend, Sami, you are partially right when you say dividend. However, whatever is not being paid as a dividend, that is also owner's money only. That is just kept with the company. However, that is also owner's money. If you only take dividend, your decision will be slightly biased, because there will be some company who will say, what, we don't pay much dividend, but if we give value in terms of your share, their value of their share would be very much, very big, very high. Now, so what we have to see is the earning per share rather, not just the dividend. So earning per share gives you the whole picture. Really, the investor is getting how much per share. So that is the baseline for us. That really helps in terms of only from financial perspective. Okay, everybody is clear about it, right?
Yeah.
Now, if earning per share is our base, is bigger the better or smaller the better?
Bigger the better. Yeah.
Bigger the better, because earning, obviously more earnings, it is better for us, right?
Yeah. Correct.
Great, great. Now, any doubts, guys, in these four scenarios that we just discussed? Okay, let's move to question then. We have already covered one of the critical aspects of capital structure. Let's move to question.
Uh,
Yeah, please.
just out of the box,
Yeah,
I have a question.
Mhm.
Like in many of the companies, companies should be give like shares, right? If they are like serving for the organization for 4 years or 5 years. Just
Yeah.
take an example, Amazon.
Mhm.
So like employees not invest in anything, but he is providing his service to the
Mhm.
organization or as a
Yeah.
part of an employee. So whether this will be part of equity or EPS or it is something different.
The service that the employee is giving to the organization, you are asking, right?
No, in general, like,
No.
even
I
the
think
employees are
no. That is a part of. I understand. Dheeraj, what he's asking is ESOPs,
Okay, ESOP.
employees stock option plan, right? So that is part of equity only. From the equity which company owns,
Yeah,
they distribute it to the employees.
yeah,
That's a ESOP, they call it, employee stock option plan.
yeah.
So there's
Actually,
not debt. Yeah.
please, yeah, yeah. Continue, please.
Yeah, so that is neither debt nor preferential and others. They give it as an equity only. However, many a times when they are going for IPO, they put preferential shares for employees. That's they say preferential share, but again, that's all equity only. There's no that's not a debenture, right,
Mhm.
Dheeraj?
Yes, yes, that is absolutely correct. For others, ESOP is not really in our course, so you don't really
Yeah.
have to focus on it. Just out of curiosity, he asked, Sami, we can actually discuss on it later, because ESOP
Yes,
in itself has a whole accounting standard assigned to it. There is so many
Yeah,
things in
yeah,
ESOP. I'll tell you, it's a really complicated chapter that we are moving into. So better
absolutely.
we avoid it. If you want
Yeah,
to explore that, you have interest, we can discuss separately. Yeah,
sure, sure. Yeah,
great.
yeah. Thank
So anybody else, any other doubts? Okay, let's move to the question. X Limited has equity capital of 5 lakh. So just mark there equity capital that you have 5 lakh rupees. Divided into shares of 100 each. So how many shares can somebody tell? 5,000 is the correct answer. Absolutely. Thank you. It wishes to raise 3 lakh rupees for an expansion program. So it has 5 lakh right now invested. It needs 3 lakh more rupees. The company has following alternatives. So these are the options that we have with us. First one is all common stocks. Everything is common shares. Okay. Now imagine 5 lakh, you already have 5,000. 3,000, 3 lakhs, you are getting equity. Can somebody tell what is the revised number of equity shares?
8,000.
That is absolutely correct. Everybody got that?
Yeah.
Great. Now the second option is 1 lakh equity and the balance is debentures at the rate of 10%. So balance, when you say how much it is, we needed 3 lakhs. 1 lakh is from equity. That means the rest is 2 lakhs. Is that okay, everybody?
Yeah.
Now you know the next question that I'm going to ask. What is the answer to that question? What is the revised number of shares for this second option?
8,000 minus
6,000.
2,000, right?
I heard 2,000. That's
6,000.
incorrect. I heard 6,000. That is incorrect.
6,000.
No, that is incorrect.
1 lakh equity,
No.
right?
Yeah.
And remaining in the debentures. So
Yes.
we already have 5 lakh equity.
No. This is alternative to option one, not an addition.
Oh,
This is an alternative to option one.
Yeah. So the 1 lakh in equity, right?
Yeah.
So that
Oh,
is
yes,
a
yes, yes.
1,000
Right.
share.
You are right. You are right. You are right. I was wrong. I was
6,000, no?
I was doing the incorrect calculation. You are absolutely right. It's 6,000.
So
My bad.
5,000 earlier and
Yes.
1,000 here,
Yes.
6,000.
Yes.
Mhm.
You are right. Yeah. Everybody got the 6,000? Anybody has any doubts?
no. 5 lakhs, for 5 lakhs, we got 5,000 shares. So now 10% of 1 lakh, which is 1,000. So 5,000 plus 6,000.
Yes, you said something 10% though. That was incorrect.
10% of 1 lakh, right?
Why do you do
No,
10%?
Here it mentions the balance debentures at 10%.
No, 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 no,
no,
no,
no.
no, no. That has nothing to do with it. You have equity amount of 1 lakh. Okay. Your shares is of what value? 100 rupees each. If
Correct.
equity is 1 lakh and 100 rupees each share, how many shares do you have?
1,000.
1,000. You earlier had 5,000. Now you have 1,000.
Right.
That comes to 6,000.
Oh, okay.
It has nothing to do with 10%. Okay.
So this is just to
10% is for
confuse.
debenture. No, no, no,
Okay, this is
no.
just to.
It has relevance. It
Confusion.
has relevance. Yeah, it has relevance, but it will be used later when we'll be.
Not on the equity part. It
Yes,
has no implication on equity.
yes, yes. That is correct, sir.
Okay.
Yeah. Now the third
So there are
option.
two parts actually, Sami. There are two parts in that question. Like what is it?
Mhm.
First is 100% equity, right? In second, he's saying that the distribution is in two different sets. One is equity, second is debenture. And the equity is 1 lakh and debenture is 2 lakh.
Correct.
That's
Okay.
how it differentiates.
Yeah.
And now 1 lakh goes into your 5 lakh as equity and 2 lakh goes separately as 10% of 2 lakh as an interest
Yeah.
later on.
Okay.
Yeah.
So this debentures 10% is like deducted from 3 lakhs.
No, not necessarily.
No. That 10% will come when you have the income given and you have to reduce your for your PBT, right? Profit before tax. That time that 10% will be used, not anywhere else.
Yeah. In
Okay.
fact, Sami, in 10 minutes we are going to do that. You can just wait
Yeah.
for
Sure.
it. It's all right. You'll be either we will be using it and you'll be getting to know where exactly we are using it. Yeah.
Sure. Yeah.
Great. Now the third option is all debentures are 10%. All debentures, that means all 3 lakhs, everything is debentures. Can somebody tell me what is the revised number of equity shares?
It's the same.
Same, exactly
Right.
same. 5,000 only.
Five.
Awesome. Now the fourth one is 1 lakh in equity and balance in 8% preference shares. What is the balance? If 1 lakh in equity, then 2 lakh in the preference shares. What is the revised? Sorry, I could not.
6,000.
6,000 is the correct answer. Everybody got it? How you calculated 6 lakh? 6,000, sorry.
1 lakh divided by 100 again.
Perfect.
Like what we did in option 2.
Yeah, yeah, yeah. Any doubts, guys?
It is. What is this balancing 8% preference share?
So what it is saying is basically out of those 3 lakh new investment requirement, 1 lakh is you are getting from equity. The balance amount you are getting as a preference share. They're just using that terminology, slightly weird terminology. Normally they don't use that. Here in this question it says and balancing 8% preference share. That just simply means that out of 3 lakhs, 1 lakh in equity and the balance amount, which is 2 lakhs, is from preference shares. Is that okay?
So equity is also share now. So basically it's all shares.
It's all shares, but part of it is equity, part of it is different preference. Does that make a difference?
Sorry,
Yes.
Does that make a difference? That's my how do you say, what kind of question? Rather, let me ask you that thing because we have already discussed that. Does that make a difference?
It will. I'm not sure.
It will.
It
Reason
will.
is,
That's what I think the last example it to
yeah,
25,000 at 3%.
yeah,
That's the difference it is going to make in the EPS.
yes. This is the one. The last one when we had the 25,000 preference shares, no?
Correct.
Yeah. That dividend, whatever you pay to the preference shares, no, that is deducted. Because I'll tell you, I'll go a little bit into that logic also. That's actually a good point to discuss. When you take a decision of like this, expansion plan or anything, you take that decision on the basis of the equity shareholders alone. You don't look at the preference shareholders. That decision is taken for equity shareholders alone. That means everything that you calculate should be for equity shareholders. That's where the difference comes out. If you have to pay something to the preference shareholders, you have to deduct that payment also in order to take this kind of decisions. That's why there is a differentiation is happening, equity how much and preference how much. Is that okay?
Getting it.
Yeah, yeah. Now the next part, it reads the present EBIT of the company. EBIT is nothing but earning before interest and tax of the company is 1,50,000. Tax rate is 30%. You are requested to calculate EPS in each alternative and advise the management. Had it had missed that first part, had it had said you are required to advise the management, you still would have calculated the EPS only. However, they have given a nice hint that you have to calculate the EPS, and on that basis, you have to give the advice. Now, you already have done everything. I'll just give you a brief what to do. You do it and you tell me the answer. First of all, you have four options. On those four options, you calculate the EPS similar to how we have calculated here. Similar to how we have calculated here, you calculate the EPS. You start from the EBIT. EBIT is nothing but your 1,50,000. You deduct the interest, calculate the tax, deduct the preference dividend, and calculate the EPS. Please try. If you are stuck at any point, if you are not remembering what is to be done, please let me know. I'll tell you immediately what needs to be done. And do for all those four alternatives, those are independent. Okay, do one each. Don't mix any of those together. The first one is separate, second one is separate, third separate, and fourth is separate.
Just one question.
Yeah, yeah.
First we deduct debentures, then interest, and then tax,
Yes,
and then preferentials.
perfect. Then preference dividend.
And there's no.
There is no, sorry.
Okay.
No, I
There's
could
no
not hear.
deduction. Yes, it is equity, right?
No. Whatever we are
Hello?
calculating is for the equity people only. So we are not going to
Okay.
deduct anything for equity people. Yeah.
Okay.
Yeah. Once we'll be done with this question, we'll wind up for today. I'll give you the two questions for you to practice for tomorrow morning discussion, and we'll deal with those tomorrow only. I thought of doing one today, but I don't think we have time.
Dheeraj.
Okay, sorry, I could not unmute only. Yeah, please tell.
Dheeraj, meanwhile, I just want to ask something, Dheeraj.
Yeah, please.
Dheeraj, over here you told, no, in the beginning you were telling me this equity, 1,000 rupees, 100 rupees per share,
Yeah,
1 lakh on the right side,
yeah.
second box.
Mm-hmm.
Dheeraj, when we give shares, it doesn't work out that way, no? Yeah, that one. Now a new investor is coming,
Yeah,
okay, and we invest at 1 lakh
yeah.
and 5 lakhs.
Mm-hmm.
We don't no 100 rupees, so we don't give him that 5,000 shares. Doesn't work out that way, no?
No,
General.
so that's no. In general, it depends on the plan only. It depends on case to case only. Uh, if you have heard of mergers, when the mergers happen,
Mm.
uh,
Mm-hmm.
there only these kind of scenes come out. Definitely these things should be there. Normal investment, suppose you hear a Chinese company has invested in a tech company here in Bangalore, so that is not saying everything clearly, right? Where, in what exactly have they invested? Have they given a loan? Have they invested in the equity shares? Have they invested in other, have they had some other kind of arrangement? So it
Mm.
totally depends on that.
No, I understand. Okay, there is what I have a doubt here is
Yeah.
usually when now 5 lakhs is coming into the company,
Yeah.
okay,
Mhm.
what actually happens is that share value per share value they try to increase, no? That
Okay,
100
that
rupees
does.
share is there, no?
Okay.
That they try to increase to maybe what maybe whatever based
Yeah.
on
Yeah.
that, and
Mhm.
then try to give them smaller value, no? Smaller number.
Smaller number.
That's how
I totally get that. Absolutely, that happens. That's happened. I totally
that,
agree with that. That
that is.
happens. Here,
Uh,
for simplicity purpose, I have kept that 100
mhm.
same as before. Like we
Okay,
have
okay,
invested 100, still it is 100 only, because that is opening up the area where it is not in our course.
okay.
So,
No, no,
but
I
that happens.
add.
I totally agree. Yeah.
Mhm.
So, Viraj, answer, can you check?
Yeah. Please, please.
13.13, option
Perfect.
1,
Perfect.
15.17,
Yes.
18.20.
No, that's 16.80.
One second. How come?
We'll see. Fourth one. Fourth one.
14.83.
Fourth one is absolutely correct. Third one, can you tell me the earnings? What is your earnings?
Oh, I think I made a mistake. Here it should be.
You can just verify. I have that. Yeah.
I got it.
Oh,
The
perfect.
problem
Perfect. Yeah.
because
Perfect.
I copied the cell, na?
Yes. Yes.
Instead of 20,000, 30,000, I took 20,000.
Oh, okay. Okay.
16.8.
Perfect. That is correct. Anybody else who got the answer already?
No, this I'm totally lost. I was doing something else. The
Oh, is it?
numbers I could not get.
Oh, okay. We'll go in detail. No problem. Sal and anybody else who has already completed, you can leave the call because I've already found out. So we are already done. We'll discuss this for
Dheeraj,
everybody who is not able. Yes, please, please.
Dheeraj, I calculated till the previous step until there the answers are matching the earning available for each share that you've
Earning available for equity
calculated.
shares that you have
So
calculated.
after that, we had to divide it by the number of shares. Is it?
Yes, we have to divide it by number of shares in order to calculate the earnings per share. Yes, you're right.
Mhm.
And
Okay,
your
okay, that
your
part I
number
missed.
of shares is different for all four alternatives. Just keep that in mind.
Right.
Yeah.
Yeah.
Yes. Great. Now, anybody else has any specific doubt? Okay. Shami, let's go alternative by alternative. Okay. The first one. First one says that all common stocks. Yeah. All common stocks. Now tell me if that's the case, what was the total number of equity shares that we got? Revised number of equity shares?
5 lakhs divided by 100, so 5,000.
No. Total revised one. Revised one.
Uh,
Option 1.
Revised number of equity shares. It's all
all
right.
common shares.
Take your time. It's all right. Yeah.
Mm, I did not get here. Like
So
I just
so
wrote 5,000.
so tell me. Okay. All right. Just I'm asking you a very simple question. Just answer me. Okay. What was the total amount of equity capital before this whole thing?
5 lakhs.
What is the amount of investment that you require?
Uh,
What is the
3
amount
lakhs,
of
right?
3
3
lakhs?
lakhs.
That is
3
correct.
lakhs.
That is correct. Now in the option 1, you have all
Hmm.
common stocks. That means everything is equity shares. What is the
Hmm.
total amount of equity capital after the investment? What is the
8
total
lakhs.
amount of equity? Yes, that is correct. If you have 8 lakhs is your equity capital and your per share value is 100 rupees, what is the revised number of equity shares?
8,000.
That is absolutely correct. Now, on just keep in mind that that is 8,000 all and note it down somewhere. Do that calculation. Okay.
Hmm.
Now let's
Hmm.
go to the
Hmm.
EBIT part. EBIT is how much? 1,50,000, right?
Correct. Hmm.
Do you have any debentures in this alternative?
No,
No. Then will you have any interest to deduct?
we have tax. We don't have interest.
Interest we don't have. Then we'll have to calculate the tax. Tax 30%
Right.
of what? How much is the tax? Can you tell?
30% means 8 lakhs plus 1,50,000. So it comes to 9,50,000 minus 30%.
I
Right.
got it where you are making the mistake. Yeah. So when you calculate tax, no, you must be familiar with this. How do you calculate tax when you do normally in your business and you show in the profit and loss account?
It
How do
is
you
after
calculate?
okay. So EBIT is something earning before interest and tax. So
Yeah.
whatever amount I'm getting, it's before tax. So I have to like if there's interest, then I have to deduct the interest amount. Whatever it lets, then we have
Yes.
50,000 interest.
Yes. Yes.
So 50,000 will be reduced from 1,50,000.
Yes. Will you have to add the equity capital to income in order to calculate tax?
No, no,
No, right? So you don't have to add
no.
the 8 lakhs, no?
Okay.
Right? You just have to take 1,50,000 and you calculate the tax on that, right? Yeah.
Correct.
So how much does it come to, the tax amount?
1,50,000 minus 30%. Sorry, I think 45,000 something.
Yes. What is the PAT then? Profit after tax?
Hmm. PAT
Simply deduct, no?
profit after tax, right?
Yes, yes,
Profit
yes.
after tax.
Yes, yes.
So 10,500 plus the earlier amount.
10,500. Where did you get 10,500?
So, sorry, no, not 10,000. 1 lakh 500.
1,50,000 you mean? Okay.
So 1 lakh 5,000, right? Not 1 lakh 50,000. 1 lakh
1,50,000.
5,000.
No, 50, 1,50,000.
No, 1 lakh
1,50,000
50,000 minus 30%. It
minus,
comes to 1 lakh.
yes, 1,05,000. That's what I was wanting. I was asking for. PAT is 1,05,000, is it? Right?
Hmm.
Now you
Hmm.
have PAT 1,05,000. You have revised
Hmm.
number of equity shares. How much?
8,000.
8,000. What is your UPS then? Earning per share?
1 lakh 5,000 divided by 8,000.
That's absolutely correct.
So it comes around 13.125.
Perfect. 13.13 or 13.125 is also fine. That is absolutely. Can you try this way for the rest of the methods and let me know if you're stuck
Yes.
at any point?
Sure. I'll do it.
Yeah, perfect.
Thanks.
Yeah. Anybody has any other doubts?
So if EBIT is given, we have to like first calculate EBIT. If there is any interest, then deduct the interest from EBIT, and
Yes.
then deduct tax from EBIT,
Yes.
and then this amount will be like PAT or
Yeah.
post
From that,
profit
if
after
you
tax.
have
Will be
preference
like,
dividend, if you have preference dividend, you have to deduct that now. Okay. After the tax.
okay, after PAT.
Yes. Yes. Yes.
Okay.
Yeah. Yeah. Yeah.
Means from PAT we have to deduct, right?
Yes, yes, yes. Now, if you'll ask me what is this amount that we are calculating, that amount is called earning available to equity shareholders. That amount is called earnings available to equity shareholders. The final amount that we are taking. No, yeah. Here in our case, in the first one, it came to 1,05,000.
Okay.
Yeah, yeah. So
Earnings available before earnings available for equity
two.
shareholders, right?
Yes, yes, yes.
Two.
Yeah, yeah. Okay, I'll just unshare this and I'll share those two questions for others who can spend some time. You can try now also, or you can try later also. We'll deal with it tomorrow only. Give me 1 second. Okay. I have posted one question just now. And the numbers that I mentioned, it just adjacent to that line. You can quickly look. If you look at it, you will be able to understand it, I think. So I'm not explaining that. I'll also post one question from WACC. It is actually partially WACC, partially capital structure. So yeah, here it is. Now,
Did you get the solution for the first problem, just for my reference?
first one as in,
The one
sorry.
what we had practiced just now in the class.
No, it's there. You tell me, no, what you calculated. We'll go from there.
No, I did not. Just for reference,
Mhm.
with respect to time, like
No, no, no problem. All right. I've already told others, no, they can actually cut off the call. That's all right.
God.
Yeah. You calculate it. Otherwise, unless you calculate it, you won't really get the hang of it. So
Sure.
it only because and I know it is difficult, especially for us working people, to take time and calculate it. So that's why I took the decision to have you guys practice here only with me. So go for it.
Totally
It's
get
all
it.
right. Make mistakes and we'll go from there. No problem.
Sure. I need that question to get flashed
Oh,
on
you
the
don't have the
screen.
question only? Okay, okay. I'll share that question. 1 second. I think I've shared both the things here, which I wanted to do. I'll
You can
just...
share on the group if it is possible.
No, it's done only. No problem. It's already done. I'll just share it now. Yeah. Here it is.
Yeah.
Also, Shell, I have not yet calculated for that question for which you wanted to verify the answers. What happened was that question I had shared to calculate only the IRR. But you have calculated all the answers, so I'll have to calculate those values and I'll just verify. Today only I'll do it sometime once I get it. Until now, I have not.
No problem. There's only one mistake I realized in
Oh, is
the
it?
payback.
Okay.
Payback, instead of selecting the low high means minimum with 1,
Okay.
I've selected highest as 1. That's
Oh,
a
okay.
mistake, but
Okay.
that's okay. I realized it later after
Oh, great,
doing
great,
it. But
great.
other than that, you can check it.
Sure, sure. I'll check and tell you. Yeah.
Dheeraj, can I verify the answers for this one that we
Yes,
were
yes.
doing?
Please, please, please. Yeah.
13.125 for the first one,
Perfect. Yes.
and then 15.167,
Perfect.
and 16.8,
Perfect.
and 14.83.
That is absolutely correct. Yeah.
Okay. Thank you.
Yeah, yeah, sure. Sami, did you complete the second one?
Yeah, second one, just trying to calculate debentures at 10%, right? So now we have to deduct this from 1,50,000.
Yes, correct. Your earning before tax comes to how much?
Uh, my EPS is 15.75.
EPC is 15.75. Let me verify. Yes, that is correct. Sorry, 15.75 you said? No, 15.17 it should be. What is your earnings that came to? Earnings is how much?
I'm not sure. I just took equity shares of 6 lakhs, 5 lakhs plus 1 lakh.
Yes, that is correct.
And then EBIT is 1,50,000.
Yes.
And then 10% debentures is deducted from 1,50,000. So it comes around 15,000. So 1,50,000 minus 15,000, 1,35,000.
15,000 you said?
Yeah, 10% of 1,50,000.
Why 1,50,000? Is it not 2 lakhs?
10% of EBIT, right?
No. 10% of debentures that you have. No. Debentures is how much?
3
Imagine
lakhs.
this. No. Debentures is 2 lakhs. In this case,
So,
debentures is how much? 2 lakhs only, right?
it's already given 2 lakhs. I thought
Yeah. It's already given. It's already given. Yeah. So debentures is 2 lakhs. Then the 10% interest that we will pay to the debentures, will it be calculated on 1,50,000 or 2 lakhs?
2 lakhs.